A very good evening to all of you. I hope all are doing well. Today we are going to discuss the chapter input tax credit, which is very, very important. Uh, Let me start with the definition. The word input tax credit has been defined in the GST means the credit of input tax, and the input tax is further defined that it can be the credit of forward charge plus reverse charge. Why I am saying forward charge plus reverse charge? Because if you see, this particular part is nothing but the forward charge. It means that tax, whether it is CGST, SGST, ITGST, UTGST, which is charged on any supply of the goods or services. It means you, let's say you are the supplier and I am your customer, then you are charging the GST on the invoice. It means talking about the forward charge. And it includes taxes paid by the recipient. It can be IGST on import of the goods and it can be the reverse charge. Combining all, I can say it is nothing but the reverse charge. We have already discussed in the section 9 subsection 3 or section 9 subsection 4. There was the reverse charge. Similarly, you will find the section of IGST and UTGST and SGST. But input tax does not include the taxes paid under composition. We know that in case of the composition, neither I can take the ITC, whatever I'm paying the taxes, because it is not including in the definition of input tax. And we have we know that the composition taxpayer cannot collect the tax from the recipient, meaning thereby composition can neither collect the tax nor take the ITC. Now we are moving to the important part, the ITC basic requirement that it should be in the course or furtherance of business. I can take the ITC if it is in relation to my business. Where it is written, if you read the language, every registered person. Now, it means if you are unregistered, can you take the ITC? I like to ask the question to every participant. Assume that I am unregistered. Can I take the ITC? If answer is yes, give me the situation when I can take the ITC. But let me continue. Meanwhile, you can answer. If I am registered person, then only I can take the ITC. Registered person, I cannot take the registered person, I cannot take the ITC. But at the same time, you will read in the section 18 that if you are unregistered, there are some circumstances. There are the 4 circumstances covered in the section 18, wherein at the time of the transaction, either you are unregistered or you are not eligible. But you can take the ITC because it is covered in the section 18, ITC in case of the special circumstances. That I am not doing discussion right now, but we will do. Only the point which I like to make the comparison, every registered person, can you take the ITC if you are unregistered? Answer would be limited yes, provided it is covered in the ITC section 18 subsection 1, special circumstances. Subject to certain condition and restriction, we will discuss that you can take the ITC only when certain conditions are satisfied, certain restrictions are there. Okay. As may be prescribed and in the manner specified in section 49, be entitled to take the ITC as on any supply of the goods or services or both which are used or intended to be used in the course or furtherance of his business. Has to be read with every registered person means if I am having the one PAN but multiple registration. Let's say I'm registered in Rajasthan, I'm registered in Haryana, I'm registered in Karnataka. Then the person who is registered in Karnataka cannot take the ITC for the course or furtherance of business of Rajasthan business. If there is any invoice which have relation with the Rajasthan business, then the Karnataka cannot take the ITC because even though they are having the one PAN, but in the GST, we know that every registered person would be separate person. So it means Karnataka, Rajasthan, Haryana are the three different registered person in the GST, and they can take the ITC only when it is related to his business. Now, the question, there would be the important point which you need to understand. There's a relation of HO and branch. We know that HO have the different GST number and the branch will have the different GST number. If there is any relation, then can HO take the ITC because 16(1) talking about his business? Then answer would be primarily no. Primarily no. But yes, we will discuss. There is a circular 199, which we will talk a later stage, ISD versus cross charge. So normally, if it is a service, then head office can transfer the input tax credit through ISD mechanism. But what happen if it is goods? We know that there is a concept of cross charge that HO can transfer the ITC by way of the billing to the branches. Ultimately, what I like to highlight HO cannot retain the ITC if it is not related to his business. Head office cannot retain the ITC if it is not related to his business because 16(1) talking about his business. Let me move that there are the five, there are the initially five, now there are six conditions for taking the input tax credit. What are the six conditions? Let me broadly talk about in this slide, but we will go into each and every section along with the relevant circular in detail. First is tax invoice has to be there. Perfectly, okay. Goods or services should be received. Fine. Taxes has been paid. Okay. GSTR 3B has been furnished. Now you all tell me GSTR 3B has been furnished. My point is by the supplier or by the recipient. Now the condition which I'm talking about, it is written in 16(2)(d). I am talking about that GSTR 3B has been furnished. This is one of the conditions for taking the ITC. Is it by supplier or by recipient? Is it by supplier or by recipient? You are requested to give the answer in the chat or you can have the access to the BOS chat also. You can give the answer over there as well, as per your choice. No problem. So we will discuss at a later stage that this is related to 3B has been furnished by the recipient, not by the supplier. For the supplier, there is one condition that taxes has been paid. That's it. But the 3B condition which is written in 16(2)(d), the condition which is written in the 16(2) is for the recipient. But now point to be noted, once I say that this condition is related to filing of the GSTR 3B by the recipient, now my counter question comes, is there any condition which talks about supplier 3B? Is there any condition in the chapter which talk about the supplier GSTR 3B? My point is that you have correctly given the reply. This 16(2)(d) is talking about recipient has furnished the GSTR 3B. Perfectly okay. Now my counter question, is there any condition which talks about supplier has filed the GSTR 3B? Any condition anywhere in the law? In the ITC chapter I'm talking about, it is in your syllabus. That is the reason I'm asking the question. Then, yes, we will discuss, but not now. If you will give the answer, then I will give the confirmation. Otherwise, I will not discuss right now. Abrikesh, Viraj, everyone. If you know, kindly give the reply. Nine. See, if I am talking about 16 subsection 2, there are the 6 condition, and out of the 6 condition, none of the condition with respect to supplier GSTR 3B. None of the condition with respect to supplier GSTR 3B. So my point is, I agree that 16(2) it is not written. Can you tell me anywhere else it is talking about supplier GSTR 3B? Specifically supplier GSTR 3B? answer is yes. We will discuss in the rule 37 and now capital A. 37 capital A, wherein we will discuss about the supplier GSTR 3B, not the recipient GSTR 3B. What was the requirement condition that we will discuss in the rule 37A, but only point I like to make comparison because now it is only the revision class. So you will be able to understand the interlinking. You will thorough about the interlinking. Okay. GSTR 2B, now the supplier file which return, based on that the transaction will appear in the recipient GSTR 2B. Give me the answer that supplier file which return, then the transaction will appear in the recipient GSTR 2B. Answer is absolutely correct. GSTR1 is the statement of outward supply. Yes. So what is the condition now? This is the new condition which talks about that supplier should file the statement of outward supply and the same should be communicated to the recipient. And which form it should communicate it? Rule 36(4) talking about it should be in the GSTR2. ITC is not restricted as per section 38. This is the condition we will discuss. Now let me go about one by one condition in detail. First condition, that no registered person shall be entitled to take ITC unless first he is in possession of the tax invoice, debit note issued by the supplier or such other tax paying document. Which such other tax paying document? Go to the rule 36(1). It talk about various other document for the purpose of taking the ITC, like invoice, debit note, self invoice. 31(3)(f) is talking about self invoice. Then bill of entry or any other similar document as prescribed by the custom, ISD or credit note, etc. These are the documents which has to be there in order to take the ITC. As you correctly given the answer that the supplier should file the same in the statement of outward supply, that is GSTR1, and such detail has been communicated to the recipient in such manner. What is the manner? Rule 36(4) talking about in the GSTR2B. Okay. So it means the ITC is not available till the time it is not appearing in my GSTR2B. And he has received the goods or services. Have you heard the word bill to ship to model? Have you heard the word bill to ship to model? Tell me one thing, whether bill to ship to model is only for goods or it is possible for services also. Is it possible only for the goods or it is possible for services also? Now, the answer is both. Absolutely correct. Abrikesh. Answer is both. Why both? When you read the place of the supply chapter, see, point to be noted. This is sometime you will not have the direct answer. This is only I'm developing the understanding because the question can be asked in the different manner. When you read the place of the supply chapter, you will find for section 10, that is for supply of the goods, you will find a specific provision for place of supply for bill to ship to model of goods. But very interesting thing, in the section 12, you will not find any direct provision for bill to ship to model of services. So prima facie, people may have understanding, student may have understanding, bill to ship to model is not possible for services. It is possible. Where it is written that you will not find any provision in the place of the supply chapter, but you will find provision. This is the confirmation that bill to ship to model is possible for services also. Why? Because this particular part has been introduced, added from 1 Feb 2019. It was not there in the law since beginning. What is the condition? He has received the goods or services. I am a recipient, so I can take the ITC first when I have the tax invoice. Point number one. It should appear in my GSTR to be point number two. Point number three, that the goods or services should be received to me. Now we know, let's say A is located from Delhi, B, okay, from let's say Mumbai, but I have given the instruction to A that please deliver this goods or please provide this service to Mr. C located in Delhi. Now, if I give the instruction to A, please provide the goods or please provide the service not to me, to any other person, then it is nothing but the bill to ship to model. So in case of the bill to ship to model, whether it is goods or services, whether we will receive the goods, actually answer is no, it will not be received actually. Therefore, my dear friend, the word deemed is being added in the law. By deeming provision, it has been created deeming provision. We are saying that it will be deemed that Mr. B, who has given the instruction, has received the goods as well as services. This would be the indirect way identify whether bill to ship to model is possible in case of the services or not. Let me move further. Yes, I can say this is the condition which is not possible to comply in the current date. This is the condition which is not possible to comply in the current date because the rules is yet to be prescribed. See, in the law, whenever it is written that word prescribed in the GST law or any other law, currently I'm talking about ITC chapter. In the law, if the word prescribed is there, it means corresponding rules has to be there. Because in the GST, as of now, the corresponding GST rules has not been framed this section. Therefore, this section is there. Therefore, this is one of the condition which is notified. I'm not saying not notified. Section is notified. No problem in that section. It is notified already. But the corresponding rules yet to be framed. And once it is framed, then we can say how to comply the same, we will be able to understand. What is the condition? Let's read. Details of ITC in respect to the said supply communicated to the registered person has not been restricted. When you read the 38 subsection 2, what is the meaning? What is category of the restriction? It says that details of the ITC cannot be availed fully or partially if by the recipient on account of the details of the said supply furnished by the supplier. Which supplier? By any registered person within such period of taking the registration. How much period? Is it 1 month? Is it 3 months? Is it 6 months? Is it 1 year? How much period? That is yet to be prescribed. So meaning thereby, once it is being prescribed, we can say, yes, we know that how much period, if the supplier has taken the new registration, ITC is not available to the recipient. Then talking about who has defaulted in payment of tax and default is continued for again such period. How much period? Not being prescribed, not being told by the law. So it is yet to be prescribed. When the same will be prescribed, we will be able to understand that what is the period which is talking about in 38B clause 2. 38B clause 2. Similarly, if the tax liability is more than reported in the GSTR1, but the tax is paid, less tax is paid in the GSTR3B. Such limit as may be prescribed by any registered person during such period. During such period, again, how much period? We don't know, will be prescribed. Has availed the ITC of an amount that exceed the credit that can be availed in accordance with the clause A. So if the supplier has availed the excess ITC apart in addition to his eligibility, then ITC would not be available to the recipient. It is very tough. See, now I am not checking my eligibility after effective operation of section 38 subsection 2 clause B. I need to check the supplier status also for the point which is being given there, and by any registered person 1%. So there is a provision 86 rule 86B which talks about that ITC maximum ITC can be used 99%. 1% ka ITC has to be 1% of tax liability has to be paid in cash. We can't use ITC. So if that by registered person who has defaulted in 1%, then also you cannot take the ITC by such other class of the person, such other class of the person as may be prescribed. So we have to wait, but this is the condition. 16 to C and 16 to D. Subject to the provision of section 41, the tax charge in respect of the supply has been actually paid to the government either by cash or by ITC. Only the 16 to C is saying that taxes has been paid by the supplier to the government. But the problem is how we will identify this mechanism is not available. How we will identify this mechanism is not available. But I can say one small portion of this you can identify. Let me repeat once again. 16 to C is saying, subject to the provision of section 41, that tax charge in respect of the supply has been paid to the government and cash or ITC. But how much it is being paid on cash or ITC? But how will I identify the mechanism? That I'm saying one small part is possible. That is being captured in Rule 37 capital A. See, let's say if the supplier filed the GSTR1, example, let's say for the month of April 2024, if the corresponding 3B is not being furnished at all, it's not being furnished, can't I say that majority of the chance that this supplier, whatever the supply he has reported in R1, he has not paid the taxes. One thing I can mostly near to accurate, I can say, if the corresponding GSTR 3B is not being furnished, meaning thereby whatever the supplies has been reported in the GSTR1 of that tax period has not been paid to the government. Can I say this one? Please confirm. Is it possible? Can I say this statement? If the supplier has filed the GSTR1 of, let's say, April 24 and the corresponding 3B is not being furnished, I can surely say that this tax has not been paid to the government. If I can surely say this is nothing but the Rule 37A. This is nothing but the Rule 37A. This is the Rule 37A. It says that supplier file the if the supplier does not file the GSTR 3B, then recipient has to reverse the ITC. Only point that they have given enough time. They've given enough time that if the supplier not furnish the GSTR 3B by September after the end of the financial year, then recipient has to reverse the ITC by 30th November after the end of the financial year without interest. After 30th November with interest. Okay. And the next condition, he has furnished the GSTR 3B, he means recipient. So this is the question which I have asked at the initial stage, that is talking about the supplier 3B or recipient 3B. The answer is recipient 3B. Any doubt you may ask? Any doubt with respect to the sixth condition which we have talked about? Any doubt, kindly ask. So there are the question by Vibhor. Let me read the question in the chat, viewers chat. Supplier has filed the 3B because this. Yes, the supplier has to file 3B because this. No. You have given the answer to my question. Okay, Vibhor. I have not seen. Fine, no problem. And you are asking the question, invoice raised by the supplier on 29th April, but material received on 4th May. So ITC to be claimed in 3B of April itself or for May, or claim in April, reverse in April and reclaim in May. Answer would be yes. This part is correct because this part has been clarified by the circular 170, July 2022 ka circular. It has been clarified that if you have received one invoice in the GSTR 2B, but you are not eligible because of any reason, then you take reverse the same and reclaim in the next tax period whenever you are eligible. Absolutely correct. So I hope it is clear. Let's move to the next slide. Now, ITC in case of the goods are received in the lots or installment. Suppose alternatively not to claim in April and claim in May, because now it is not possible because as per the guideline given by the CBIC in the circular 170, we have to follow the guideline, correct? How to furnish the any return. So in that guideline, they have clearly saying that please claim first and then reverse. Okay. We know that if the goods are received in the lot, then we can take the ITC only when the last lot is being received. But please note this last lot wala condition, everything is abide or within the time limit of 16/4. You might say, sir, I have the tax invoice of March 24, but my last lot is being received in December 24. Can I take the ITC in December 24? According to 16.2 ka proviso, prima facie answer would be yes. But 16.4 is talking about some limit when you can take the ITC. In that case, you have to claim the ITC by 30th November. Therefore, ideally, according to proviso, it is okay, but the time limit is being crossed. So effectively, you are not eligible to take ITC if the last lot is being received after 30th November, after the end of the financial year. So in that case, you have to ensure that you will receive last lot also prior to the last date to take the input tax credit. Non-payment of invoice, including taxes, by the recipient to the supplier within 180 days. Okay. So if I'm a recipient and you are a supplier, you have raised the invoice to me, I have taken the ITC, but the payment by me to you has to be made within 180 days. If I have not made, then whatever ITC I have claimed, I have to reverse along with interest. And now this reversal is the temporary reversal, not the permanent. Why I am saying the temporary reversal? Because whenever I make the payment to you, let's say after 2 year, 3 year, 5 year down the line, I can reclaim that ITC, whatever I have reversed earlier, but interest would be the loss. Okay. That is correct. Similarly, so this is talking about Rule 37. This is talking about the Rule 37, I can say. Same is true is for MSME also, as tax payment has to be made with. So basically, the intention of the proviso is basically to cater the MSME requirement to some extent, I can say, to help the small taxpayer. They receive the payment within 180 days. Otherwise, they are some sort of the penal action on the 180 days. The supplier has to receive the payment. So if not, then they are creating the penal consequence on the recipient who is taking the ITC. Okay. Now you all have completed your study. Now tell me that my question is very simple. Tell me the situation where this 180 days ka reversal will not be applicable. Tell me the circumstances when you are not required to reverse the ITC even if you have not made the payment within 180 days to the supplier. Tell me the circumstances that the 180 days wala clause will not be applicable in certain circumstances. In which circumstances? You need to give me the answer. Just waiting for your reply. 1 minute, I'm giving you 1 minute. Tell me the situation where 180 days ka reversal will not be applicable. I'm waiting for your answer.
Recording stopped. Recording in progress.
You are saying no. I'm talking about whatever exclusion is being there in the 16 subsection 2 ka proviso and read with rule 37. I'm only talking about that. So, Abrikis, whatever you have given the reply now is not being covered in the current law. Whatever the law, I'm talking about 16.2, read with rule 37. So, I'm talking when this reversal will not be attracted. First, the transaction is of reverse charge. Means if the recipient is paying the tax under reverse charge, then even if the payment is not made within 180 days to supplier, not it will not create any impact on reversal of ITC. Please tell me what is the schedule 1? Please tell me what is the schedule 1? No reversal required in case of the schedule 1. What is the schedule 1? We know that schedule 1 is the supply even without consideration. So it means if I have disposed the asset without any consideration and on which I have taken the ITC, then it is supply. There are the 4 clauses, 4 para we have discussed in the schedule 1 in the supply chapter. In these cases also, there is no requirement of amendment. Example, head office, one branch, one office, one GST number has transferred the stock to the another GST number of same PAN. It is called as distinct person, right? So schedule 1, para 2 is saying any supply between related person or distinct person will be considered as supply even without consideration. So this stock transfer by virtue of this transaction, by virtue of this para has become taxable. But even if the branch is not making the payment to this another GST number, then also he can continue to avail the ITC because schedule 1, no reversal will be applicable. Third is section 15 subsection 2 clause B in the valuation chapter. We have discussed in the last class, we have discussed 15(2)B means when the payment is the responsibility of the supplier but has been paid by the recipient. Then in that case, it will be added in the value, but to that extent, the payment will never be flowing. So for that also, no reversal is required. And obviously, if I have made the part payment to you, let's say you have raised the invoice of rupees 1 lakh by charging the 18,000 GST. And if let's say I have made the 60,000 ka payment and whatever the tax is applicable, I have made the tax payment. So I need to reverse the ITC only for the balance part, not for the full 18,000. I'm required to reverse the ITC. This is the things which you can read from rule 37A. I'm skipping that. Rule 37, not rule 37A. Now we are entering into the rule 37A. I have framed the some point, some discussion already happened with the 37A. What is the 37A? They are talking about if supplier has not filed the GSTR 3B, let's say financial year 23-24, please read the para and then tell me the what is the last day to file the GSTR. See, till what time supplier not file the GSTR 3B, then ITC need to be reversed by the recipient. If the supplier not file the GSTR 3B, by what time then recipient need to reverse the ITC? By what time? Without interest. We can say, yes, absolutely correct. The filing of 3B, filing of 3B, filing of 3B, filing of 3B is till 30th September. In my example, I can say till 30th September 2024. If the supplier not file the GSTR 3B by 30th September 2024, which is GSTR 3B, are they talking about August 24 GSTR 3B? Tell me one thing, that this rule 37, are they talking about August 24 GSTR 3B? Are they talking about August 24 GSTR 3B? That if not furnished by 30th September? No, 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 no. They are talking about the financial year 23-24 ka GSTR 3B, any GSTR 3B which is not being furnished by 30th September after the end of the financial year, then recipient need to reverse the ITC by 30th November, and that to be without interest. This is also the temporary reversal. This is also the temporary reversal. Why temporary reversal? Because let's say after 3 years, after 2 years, let's say that supplier furnish the GSTR 3B. Supplier furnish the GSTR 3B and taxes paid to the government. Taxes has been paid to the government. And this recipient who has reversed the ITC can reclaim the earlier reversed ITC. That section 41 subsection 2 is allowing that you can reclaim the ITC whenever the tax is being paid by the supplier to the government. I hope it is clear. I hope it is clear. Mansa saying, Arsim supplies, deemed supply. Yes, yes. Very nice, very nice, very nice, beta. Great. Now, just allow me 2 minutes. Let me talk about one important comparison. Which comparison? Rule 37 versus Rule 37A. Directly, it will not come in the exam, but conceptually, it is really important you to understand. Okay. I have prepared that Excel sheet for all of you. Let me share that Excel sheet. I hope it is visible. I will share that Excel sheet. It will be uploaded in the ICAI login. But give me the answer. Rule 37 and Rule 37A I'm talking about. The payment is not made by which party to which party. Then the ITC reversal will be applicable in Rule 37. Similarly, tell me in the Rule 37A, which party not made the payment to which party, then the reversal will apply under Rule 37A. Very interesting. If you able to give the answer, it's really means give the ample clarity to your understanding that I can say. My question is that which party is not made the payment to which party, then the reversal of Rule 37 will attract. Similarly, you will give the answer that when the 37A will attract, which party not making the payment to which party. The answer is absolutely correct. Very nice. Very nice. So the first is agreed. In the rule 37, if the recipient is not making the payment to the supplier, then the ITC need to be reversed. If the recipient by recipient to supplier. What about 37A? What about 37A? No, not same. Not same. It is not same. In the rule 37A, supplier by supplier to government. Difference I'm talking about, 37 is talking about recipient not made the payment to the supplier, and 37A is talking about by supplier to the government. My example, let's say 1 lakh is the taxable value, 18,000 is the tax, total is 1,18,000. What is not paid? Tell me what is not paid. Which amount is not paid? 1,18,000 or 1,18,000? Give me the answer by giving the amount. Is it 1,18,000 or 1,18,000? The answer is invoice value including taxes 1,18,000. But what about the 37A? Which payment is not made? Which part is not paid? The answer would be taxes. Absolutely correct. Time limit for payment. What is the time limit for payment in the rule 37? What is the time limit for payment in the rule 37? 180 days. Very nice. Very nice. And what about the rule 37A? What is the time limit when the payment is not made by which date? The answer is yes. They have given the ample time. They have given the ample time by 30th September after the end of the financial year. 30th September. Any specific return are they talking about? Any specific return are they talking about? No. But here they are talking about GSTR 3B. Will it be interest or without interest? Will this reversal will attract the interest or will it not attract the interest? Or is there any relaxation? Answer is it will always attract the interest as per the 16(2) ka proviso. But in the rule 37A, if the recipient has reversed by 30th November, no interest. Can it be reclaimable? Can it be reclaimable? Say 37, yes or no. 37A, yes or no. Or both are reclaimable or any one specific is reclaimable. Very nice, Bablu. Viraj, very nice. Abricus, absolutely correct. Both are reclaimable. Both are reclaimable. Absolutely correct. Both are reclaimable. Which section it is covered? Tell me one thing that under which section it is covered? I can say the proviso to 16(2) and it is being covered basically section 16(2)(c) and rule plus section 41, I can say. No problem. So let me move to the again further discussion. I'm not reading section 41, section 37A, rule 37A. I'm not reading. I have explained the concept. You all can read, or obviously you have already read it, completed the chapter as well. Now, my question to you: if I have purchased the machine in rupees 10 lakh, of which I have paid the GST 1,80,000, company is claiming the depreciation on 10 lakh rupees. Now tell me whether the company can claim the ITC of 1,80,000 or not. Can the company claim the ITC of 1,80,000 or not? Very nice. Very nice. Answer would be yes. Because in this example, he is not claiming the ITC of 180. He is not claiming the depreciation on 180. He is claiming the depreciation only on taxable value. If he's claiming the depreciation on taxable value, there is no harm. He can claim the ITC of tax part. So the provision is that if the depreciation is being claimed on the tax, then ITC cannot be availed. Absolutely. What is the time limit to take the ITC? We know that 16.4 is talking about ITC in respect of any invoice or debit note is being available till 30th November after the end of the financial year to which such invoice or debit note pertain. Let me frame one example. Let me frame one example and ask the question. Please ignore the above. I'm giving you one example on 16.4. Asking the one question on 16.4. I have raised that tax invoice in, let's say, financial year 22-23. April 22, I have raised the tax invoice by rupees 1 lakh and I have charged the tax 5%. I am A and my customer is B. Subsequently, I come to know that there was less taxable value I have reported. So I have raised I have raised the invoice by 1,000 less amount. What I done, I have prepared the debit note. This mistake was identified by me on 1 December 2023. I have raised the debit note by charging the GST. Now tell me that this debit note, which pertained to financial year 22-23, I know the last day to take the ITC of the financial year 22-23 is 30th November 2023. But I have raised one debit note which belongs to this transaction only. I have raised the debit note on 1 December 2023. Can the recipient claim the ITC? Whether Mr. B would be entitled to take the ITC of this debit note? Very important question. Kindly give an answer. And if you can give some reason, it, it is appreciable. All the conditions of rest, all the conditions are satisfied. Abrikesh, Viraj, rest, all the conditions are satisfied. I'm saying that even if the debit note pertain to this invoice, even if the last day to claim the ITC of original invoice has been expired, and the recipient claim the ITC on this debit note, which is issued after the last day to claim the ITC of original invoice. The answer would be yes. Absolutely. You all have given the right answer, Bablu and everyone. The answer would be yes. Why yes? Because they have removed the word invoice relating to such. Earlier, there was a requirement of linking, which has been clarified in the circular 160. After this date, the debit note, the date of debit note will be considered for taking the input tax credit. If the date of debit note is for December 23, it means this is the ITC of 23-24, which can be aimed till 30th November 24. It means linking of the debit note with the original tax invoice is not required even if under section 16 subsection 4. Try to understand one thing. See, linking of original invoice. Linking of original invoice has been omitted. Linking of original invoice has been omitted from the law. From the law. 34 subsection 1, you can read that one or more credit note. Linking of the original invoice is not required with the debit credit note. In the 34, the respective amendment has been made. But I am saying that for ITC, this amendment was at a later stage in the current day. Neither you require to link the original invoice, and nor you are required to see the original invoice for the purpose of taking the ITC. The date of the debit note would itself be the date of the document which is eligible for taking the ITC. 36.2 is talking about that you can take the ITC. Earlier they were talking about all the applicable particular has to be there, but now they are saying at least 5 particular has to be there for taking the ITC. What are the 5 particular? The tax charge, amount of the tax charge, description of the goods or services, total value, GSTIN of the supplier and recipient, and 5th is the place. These are the 5 parameters which has to be there on the tax invoice in order to claim the ITC. And 36.3, they are talking about fraud, willful misstatement, no ITC. Now we are moving to the 17. Section 16 is completed. Now we are moving to the 17. Apportionment of ITC, credit and the block credit. See, whatever the credit is being available, you can claim that ITC. There is no one-to-one linking is required. It means, let's say I'm doing the business of 3 categories. Item A, item B, item C. So, in the GST, there is no one-to-one linking required. Means, if you have the ITC of A, not necessarily you can use that ITC for sale of material A only. You can use for B. Cross is possible. The section 17 is talking about that whatever the ITC is there, when you need to apportion. Why the apportionment is required? Because either you are using this ITC for non-business purpose, point number 1, 17.1 talking about, or you are using this ITC for exempt supply. Only in 2 cases, apportionment is required. Otherwise, it is a common basket. Whether you purchase A, B, C, D, X, Y, Z, any material, whatever the input service capital goods is there is no requirement to do the one-to-one interlinking. When you do the apportionment, whatever it is there in the 17. So let me read the section 17. 17.1 talking about if you are using for non-business purpose. And to the extent of non-business purpose, you can't take the ITC. Let's say this is my office and I am paying the rent on which I am paying the GST. This office, the ground, I'm giving for the yoga activity in the morning, or in the evening, I'm giving some religious purpose also this building. Some people are coming doing the religious activity. Then I am using for some non-business purpose also. Yes. Then in that case, I can say, I cannot take full ITC. Question come, how much ITC I cannot take? That we will discuss in the rule 42, if it is input and input service, and rule 43, if it is capital goods. Rule 42, if it is input and input service. Rule 43, if it is capital goods. Okay. Coming back to the discussion. So we have the common basket. Now I am 17 subsection 2 say that if your outward supply is exempt also, then you need to reverse your ITC to the extent of exempt supply. How to reverse? Same concept. Apply the rule 42 for input and input service and apply the rule 43 for capital goods. But here one thing you need to understand, the exempt supply, which is defined in the GST, the scope only for the purpose of 17.2. Only for the purpose of 17.2, exempt supply scope has been widened. It means whatever the exempt supply has been defined in the section 2 clause 47, it is not limited to that. They have added some more supply, which ideally is not exempt supply, but are considered as exempted only for the purpose of 17.2, means only for the purpose of reversal of ITC. Now, zero rated supplies. What is the zero rated supply? Section 16, subsection 1 of IGST Act says that two types of the supply. One is export and one is SEZ. My dear friend, now every SEZ supply, my question to all of you, whether every SEZ supply is zero rated supply, whether every SEZ supply to the unit or developer is zero rated supply, any exclusion, any counter. What is the answer? Whether every SEZ supply is zero rated supply. Answer is no. Why no? Because 16.1 of IGST Act has been amended on 1 October 23. What is the amendment, sir? Amendment is the word authorized operation has been added in the definition. When you read 16.1 of IGST Act, the definition of the zero rated supplies, now export is earlier also, but I can say if you are making the supply to the SEZ and it is authorized operation, then only it is called as zero rated, otherwise it is not zero rated. Will the zero rated be considered as exempt supply? No. They are saying zero rated supply is taxable supply. Zero rated supply is considered as taxable supply. So no reversal is required. Correct. Then what happened? So the next question, what happened if the exempted item supplied out of India, will the ITC be available? Normally we can say if the supply is taxable, you can take the ITC. If the zero rated supplies, you can take the ITC. But if it is an exempt supply, you can't take the ITC normally. If it is a non-taxable supply, you can't claim the ITC. But suppose if I am making the supply out of India, but item is exempted, will you allow me to take the ITC? Answer would be yes. Why yes? Answer would be yes, because if I read the 16.2 of IGST Act, this line is important. This is IGST Act. It says that subject to 17.5, ITC can be availed for making the zero rated supplies. Even if the supply is exempted, no problem. No problem. You can claim the ITC and subsequently you can take the refund also. What is the meaning of capital goods? What is the meaning of input and what is the meaning of input service? Goods is being divided in two parts. Means either capital goods, and if it is not capitalized, then input. Goods which is being capitalized is capital goods, and any goods other than capital goods are input. Input means other than input means goods but other than capital goods. Input service means any service used or intended to be used in the course of furtherance of the goods. So 17 subsection 3, which I was talking about, that value of the exempt supply shall be such as may be prescribed and include So whatever the definition we are having, the definition of the exempt supply, that is okay, but plus the recipient is liable to pay tax on reverse charge basis. Are they talking about outward RCM or are they talking about inward RCM? Here, are they talking about outward RCM or are they talking about inward RCM? Are they talking about inward RCM or are they talking about outward RCM? Okay. See, we are calculating the total supply. Total supply means in normal, I can in normal term I can say I am calculating my sale. Why I am calculating my total sale? I am dividing how much is exempted and how much is taxable. Why we are calculating this? So that the extent of exempt supply, I cannot take the ITC. I cannot take the ITC to the extent of exempt supply. So it means we are calculating the turnover. We are not calculating the purchase. We are not calculating the expenditure. We are calculating the outward supply. We are not calculating the inward supply. Make sure 17 subsection 3, which is talking about exempt supply, it means your outward supply, which all are to be considered as exempted. Will the inward is the part of aggregate turnover? Will the inward supply be part of my turnover? Answer is no, sir. I'm only paying the taxes of which I can take the ITC. So why we are calculating the exempt supply? Here we are calculating the exempt supply for the purpose of reversal of ITC. Why reversal, sir? Because I'm calculating my exempt, my taxable. 17 to say that whatever the ITC you have taken, you need to apportion in the exempt and taxable. So why to apportion? Because to the extent of exempted cannot take the ITC. So it means they are talking about outward supply. Exam, you may have the some part to create the confusion. Might they say inward supply is liable to RC 1 lakh rupees? Might be you can add in the calculation of rule 42 and you end up with the incorrect amount. So it means if I'm paying the taxes under RCM, it is not my outward supply. Only outward supply which is considered as exempted, whatever the exempt supply, plus outward RCM. Suppose I'm advocate and I am giving the service to you. You are XYZ Limited. I'm registered in the GST. I'm advocate. I'm registered in the GST. Legally, I'm not required. Logically, section 23, 24 does not permit me mandatorily. But yes, if I want, I can. So I am only the domestic supply. So therefore, 23, 24 does not create any liability to take mandatory registration. Now I can say that if I'm providing the supply to you, even I'm registered, but on my outward supply, I will never pay the tax because you will pay the tax if you are located in the taxable territory. Okay. So when I will provide the supply to you, can I claim the ITC? The answer would be no. Why answer would be no? Because 17.3 says outward supply on which supplier will not pay the tax. So it is equivalent to the exempt supply. Ideally, it is not exempt, but they are saying we will treat this as exempt supply only for the purpose of reversal of ITC. Then they are saying transaction and security. Then they are saying sale of land and subject to para 5, schedule 2. This line is written in which schedule? This para is written in which schedule? Can you tell me? This para is written in which schedule? Quickly give me the answer. Sale of land and subject to para 5 clause B of the schedule 2 sale of building, it is written in which schedule? This is written in which schedule? This is written in which schedule? The answer is schedule 3. Answer is schedule 3. If you refer the schedule 3 para 5, then it is out of GST. But do we need to reverse the ITC? Answer is yes. When? If you are having the transaction of para 5 and this is the recent amendment. This is the recent amendment. Earlier they were limited to para 5. Now they are saying para 8A also. Para 8A of the schedule 3. Now let's take a break of 10 minutes. Let's take a break of 8 minutes only. We will resume at 7:15. We will resume at 7:15. But please give the answer of this. What is the para 8A? Please give the answer. What is the para 8A? Once we will start after the break, then we will discuss impact of schedule 3, reversal of ITC. But please tell me what is the para 8A. So, तो जी 5 मिनट का ब्रेक स्टार्ट कर सकते हैं साथ में. So, absolutely correct. Very nice, Abrikesh Mankad. So, this particular para 8A of the schedule 3, which talks about supply of the warehouse goods before clearance of the entry for home consumption. It means if I have purchased the goods from out of India, it is lying in my custom bonded warehouse. I have not filed the bill of entry for home consumption. It means I am not required to pay the GST. If I sell prior to filing the bill of entry for home consumption, it means it will be out of GST because of this schedule 3 para 8A. Now, they are saying after this amendment, they are saying if there is ITC which is linked to this supply, then it will be considered as exempted and you need to reverse the ITC. So if I will say which para of schedule 3 will require the reversal, I can say that there are total 8 para, or total 8 para are there. Out of 8, para 5 and para 8A are considered as exempt supply, and for rest of all the activities are not considered as exempted. Rest all the activities are not considered as exempted, and therefore there is no requirement of reversal of ITC. That if you have the security, so value of the land and building shall be taken same as adopted for paying the stamp duty, and security shall be taken as 1% of the value of that security. So that value is being given in the rule 45. Now, second amendment which I talk about, if you refer the recent amendment, so you will find the second amendment, this rule 43 ka explanation 1 is omitted. Because this particular, the value of the, now effectively I can say this is omitted and this is also omitted. Effectively, I can say these are the two items which are exempted, but not exempted for 17(2). What the point I like to highlight? I like to highlight two major things. In the earlier slide, I was talking about which item which are actually not exempted, but are considered as exempted, only for 17(2). That means reversal of ITC. What your answer would be? Outward, RCM, okay, para 5 and para 8 of the schedule 3, sale of securities, etc. Now I am saying that items which are exempted, actually the supply are exempted, but not considered, as exempted for 17(2). What are the answer? Answer is schedule, explanation to the section rule 43. Rule 42, 43, they are having the, now there effectively there are two entry. One is interest other than banks, and second is duty credit scrip. If you go, this is exempted, and if you see the exemption notification, you will find one para 122 something. Okay. And similarly, you will find para 727, which is as exempted supply, but this exempted supply will not be considered as exempted only for the limited purpose, that is 17(2). If you talk about the banking company, so the banking company need to reverse the 50% ITC. They have the additional option, NBFC, financial institution, banking company, etc. They have one additional option. What is the additional option? Either they follow the rule 42, 43, which is slightly typical, or they can follow the 17(2) rule 38. What it is here? It says that straightforward reverse the 50% ITC no requirement of reversal of ITC as per the rule 40 to 43. Because we know the banking company are also provide some exempt supply, interest, some taxable supply, processing fees, credit card loan, etc., any other charges. So they are also making some exempt supply, some taxable supply. So the rule 42, 43 would be applicable, but additionally, 17.4 say that you can adopt one another option, you can go for another option, straightforward 50% reverse the ITC. However, it says that restriction of 50% will not apply to supplies made by one registered person to another registered person having the same PAN. We are calling this distinct person. Suppose one XYZ Bank Delhi and XYZ Bank Mumbai having the same PAN but two different GST number. If they are making the supply to each other, it will not require the 50. It will not be covered under the 50% reversal. Now calculate and tell me. Now you have one example in front of you. Any question? So the point is that one the bank, I'm giving one example, that this is the total ITC 1,20,000. Tell me if the bank is following 17.4, how much ITC they need to reverse. Please calculate the reversal of the ITC by Delhi branch if they have not opted 17.2, read with rule 40 to 43. So 50% method is being adopted by them. Tell me how much ITC they need to reverse. Will it be 60,000? Will it be 25,000? Will it be 15,000? Will it be 20,000? How much ITC they need to reverse? So ideally 1,20,000 ka 50%, 60,000? No. Then how much ITC they need to reverse? They are saying that restriction of the 50% not apply to the same PAN multiple GST number. Now, ITC on the input service, this ITC on the input service include one invoice raised by the ICICI Bank Mumbai having the GST component of 20,000, meaning thereby out of 120, they will exclude 20,000. So it means on the balance amount 1 lakh, the 50% reversal will be applicable. Because on this 20, it will not apply. I hope it is clear. Rule 42, I will quickly explain. In the last half an hour, you can ask any question. So, but let me discuss rule 42. This rule 42 is basically why the rule 42 be adopted. If I have the common ITC, which is being used for taxable supply as well as for exempt supply, then I need to reverse my ITC. How to determine the ITC need to be reversed? There are the two rules, rule 42 and rule 43. Rule 42, I will explain. I request rule 43 you can read, and if you have any question, we can discuss. Rule 42 is applicable for input and input service, and Rule 43 is applicable for capital goods. Okay. So Rule 42 is saying that first calculate the total ITC, out of which you need to remove this three component. After that, the total ITC you will remove if you have some ITC which is exclusively, means one-to-one relation is there for non-business activity or exempt supply or block credit. If some of the ITC which are only related to exempt supply, some of the ITC, give me one. Some of the ITC which is linked to the exempt supply non-business activity or which are blocked. Remove that. Why to remove? Because we are calculating the common ITC. We are calculating the common ITC. C2. We need to calculate C2. First, remove that 1-to-1 ITC, which are actually not eligible. Okay, remove. After that, remove 1-to-1 taxable supply. If some of the ITC, let's say I have purchased this laptop only providing the teaching. So I can say that this purchase of the laptop, or let's say this is not, let's say purchase of the pen or purchase of the writing pad, purchasing of these items which are linked to the only taxable supply, then I can say that this is 4. I am eligible to take ITC. It is not eligible. But why I am removing? Even eligible, even not eligible, why I am removing? Because these are having 1-to-1 interlinking. Remove that. Why to remove? So that you can find the common portion of the ITC, the common portion which is linked to the exempt supply, which is linked to the taxable supply. Why to identify? Because 17.2 says that the part which is linked to the exempt you need to reverse. The part which is linked to the exempt you need to reverse. So let me identify C2. C2 multiplied by E by F. What is the E? Turnover of exempt supply. What is the F? Turnover of the total supply. You will multiply and then you will calculate the D1. D1 means ITC which is linked to the exempt supply. Also, the 17th subsection 1 we have discussed that if the ITC related to the non-business purpose, you can't take the ITC, correct? They are saying how much is the non-business purpose. We can't identify because there is no sale. So they are by default assuming 5%. They are assuming 5% as C2. 5% as C2, which means that total ITC ka 5% is attributable to the non-business activity. Then ITC to be reversed as per rule 40 to 43, D1 plus D2. Rest D1 and D2 is the ITC which are not eligible as per 17.1 and 17.2. Then I can say C2, whatever the C2 you have, minus D1 minus D2, that is the eligible portion out of the common ITC. You know that yes, this ITC we can't take, this ITC is fully eligible, and after that this ITC is fully eligible. So basically total eligible ITC, I can say T4 plus T3. So this we have to calculate 2 times, first at the every tax period, and second after the end of the tax period we need to recalculate. And then finally amount whatever being calculated after the end of the year by taking the annual turnover of the exempt supply and taxable supply, that will be the final, will be compared with the monthly amount. If it is higher reversed, you can reclaim. If it is lower reversed, then you have to again reverse. Please note, there is one disparity. The time limit of 16.4 has been extended from September to November. Time limit of GST returns, correction, rectify the mistake, has also been extended from due date of the September month return to 30th November. Please note, Rule 42-43 is still talking about due date of the September. Due date of September month return. It means here they have not extended November. Here they have not extended November. Okay. Now we are moving to the 17th subsection 5, very important topic, block credit. We will quickly close this topic also, and I will try to close by 8:30, and then I will give you the opportunity to ask any question. You can unmute yourself and then ask the question. Not now, after last half an hour. What is the block credit? Block credit means 17.5, which talks about the block credit. Clause A, motor vehicle. Which motor vehicle? Which is transportation of person. Any seating capacity to 13 seater. It means if I am purchasing the transportation for goods, any motor vehicle which is transportation of goods, whether ITC would be allowed? Answer would be yes, ITC would be allowed because they are blocking only the passenger transportation vehicle. They are not blocking the goods vehicle. ITC would be allowed. Second, the vehicle which is purchased up to 13 seater and transportation of person. In these three cases, you are eligible to take the ITC. Even if it is blocked, if it is falling under the exceptional category. What is the exceptional category? Further supply. Let's say I'm doing the business of motor vehicle. I am purchasing the motor vehicle, selling the motor vehicle. It is for the supply. Transportation passenger. And third is imparting the training on driving of such motor vehicle, then you can claim the ITC. If you are using for further supply, transportation of passenger, or imparting the training, I would be entitled to claim the ITC. Similarly, vessel and aircraft. If you purchase the vessel and aircraft, ITC is not eligible. But if you are using for further supply, transportation of passenger, imparting the training, or transportation goods, ITC is allowed. Then they are talking about if whatever the motor vehicle you have purchased, if you are carrying out any general insurance, servicing, repair, and maintenance, which motor vehicle, clause A wala and clause AA. It means clause A and the clause AA motor vehicle is which is blocked. If on that motor vehicle, if you are doing any, if you are taking any insurance or taking repair services or servicing, then that service would fall under the block category. Proviso says it means in this case you can take the ITC, where the motor vehicle, vessel, or aircraft are used for the purpose specified therein. It means if the motor vehicle being covered in the exception category. What are the exception category? Further supply, imparting the training, transportation of passenger, or it is a goods vehicle. Then the ITC is not blocked. Correct. The ITC is not blocked, and even this expenditure is also not blocked. Now they are saying supply the general insurance in respect of such motor vehicle, vessel, and aircraft. If you are doing the manufacturing of that motor vehicle, let's say your Maruti Industries Limited, you are manufacturing that motor vehicle, but you have taken certain insurance, repair, maintenance, you can take the ITC. They are saying if you are supplying the general insurance service in respect of that motor vehicle, so it means you have outward supply the insurance, then inward supply the insurance, ITC would be allowed. (17.5) we say exactly. 17.5 B says that if the following expenditure, food and beverages, outdoor catering, duty treatment, health services, cosmetic and plastic surgery, leasing, renting, or hiring of the motor vehicle, vessel, aircraft, referred to the clause in the clause AA. Please read this line in continuous manner. Means circular has clarified leasing does not mean leasing any type of the leasing. Leasing to be read with renting and hiring. All the three words should be read together. It means they are talking about the leasing of the motor vehicle. Normally, we know the interpretation of statute. It says that if there is a comma, it means it has been separated. Like health service, it is a separate. Cosmetic plastic surgery, it is a separate. Similarly, leasing, after that there is a comma. So does it mean every type of the leasing is under the block category? No. The leasing, renting, and hiring to be read together, and they are talking about with respect to motor vehicle. Which motor vehicle? motor vehicle which is being referred in the clause A or the clause double A. Clause A means transportation of passenger, wala vehicle up to 30 seater, and clause double is talking about vessel and aircraft. Proviso says that if you are having the same category, if you are making the same category or as an element of composite or mixed supply, then you can take the ITC. Suppose my outward supply is renting of motor vehicle, I can take the ITC. My outward supply of food and beverages, I am not restricted by 17.5b. My outward supply, suppose outdoor catering, I'm charging the rate which is with the ITC. I can take the ITC. It is not being restricted. Suppose it is not one-to-one supply, but if it is a composite supply or mixed supply, even if you can take the ITC, this part is very, very important. Let's say my company is having the contract with you and you are having the airline company. Now, as per the contract, if my company provide the some repair services, and contract says that till the time I do the repair of aircraft, your crew member, your pilot has to be picked by one of the, let's say, Tata Mercedes, Indigo, whatever the car. I have to pick your crew member or your pilot through car, let's say Mercedes, and drop to the launch. Once the repair is being completed, I will pick again by Mercedes, will drop to the craft. So it means it is my part of the contract that I have to provide the rent, I have to provide the motor vehicle, transportation of motor vehicle, which is ideally block category. Let's say I have taken a motor vehicle on rent. So this renting part is not one-to-one supply, but I can say it is clubbed as a composite or mixed supply in my main supply. Along with principal supply, the ancillary supply become eligible for input tax credit. Membership of the club, health, fitness center, not allowed travel benefit extended to the employees on vacation, such as leave or home travel, not allowed. This proviso, it says that when it is compulsory as per the law to provide the employee, then you can take the ITC. They have clarified by Circular 170 that is 172 that this proviso is not only limited to third clause. It is equally applicable to subclause 1, subclause 2, subclause 3. For every clause it is applicable. It means, suppose it is a compulsion to provide the food and beverages as per the Factories Act, let's say. It is compulsion by any other law to provide the health service. During the COVID period, it was compulsion to take the insurance for my employees. So there was a certain period in which the Disaster Management Act was amended to include the insurance. So in that period, if I have taken the insurance, let's say life insurance or health insurance of my employee, ITC would be permissible because it is not optional, it is compulsion by the law. Okay. Likewise, these are covered in the exemption exception. So they have I have written the relevant question of the Circular 172. Now, works contract, we know if I have taken the works contract service for further supply for construction of an immovable property, then ITC would not be allowed. Let's say I like to construct my factory. There are two ways to construct. Either I can outsource the contract to the one contractor. He will complete the construction and raise the bill to me. The bill would be, what is the nature of that bill? Bill would be the work contract service. Or let's say I like to construct at my own. It means I have purchased the goods, whatever the goods is required for construction, and I have taken the individual labor services, etc. They are doing the construction. In that case, that goods or services are which is related to construction of any movable property is fall under the block category. When ITC would be allowed, first explanation says that construction means construction include reconstruction, renovation, etc. to the extent of capitalization. Suppose there is a construction, small repair, then that construction will not be capitalized, will be part of my profit and loss account. Then that construction is block category? No. Explanation says if you are doing the capitalization, no, if this construction is covered under the block category, otherwise no. First exception. Second, your outward supply is one contract service. Then ITC is not blocked in 17.5. It is related to plant and machinery, then also ITC is not covered under the block category. The plant means apparatus, equipment, machinery fixed to the upper foundation, structural support that are used for making the outward supply. And please note, sometimes the question is being asked that the communication tower is being installed. Will it be plant and machinery? They are saying plant and machinery means etc. and include such foundation and structural support, but exclude. Will the telecommunication tower is a plant and machinery? Answer is no. Will the pipeline laid outside the factory premises eligible for ITC? Answer is no. Will the land building, any other civil structure is being created? Can you take the ITC? No. Which part we can take? Only if it is foundation or structural support. If it is a civil construction, civil structure in the nature, you can't take the ITC. This is very common point. Telecommunication tower, pipeline outside the factory premises. So you will write that because it is not the plant and machinery, therefore ITC is not eligible. Similarly, that if you are composition dealer, you cannot take the ITC. If you are NRTP, non-resident taxable person, you cannot take the ITC. NRTP means does not have any fixed establishment in India, but he like to make a taxable supplies from India. Then he can take the ITC. No, he can't take the ITC except the goods which is imported. So the goods which is imported is eligible to take ITC. On rest, he can't take the ITC. Then the CSR expenditure, you can't take the ITC. Okay. If it is a personal consumption, obviously ITC not being taken. Goods lost, stolen, destroys, write off, disposed of by way of the gift of example. Please note, this is very important. There is a circular one, only 92. So there is one circular 92 which talks about if suppose they have done the interlinking. What is the interlinking? I can say 17.5H versus H versus Schedule 1. What is the interlinking? I am giving laptop worth of rupees 60,000 to my each employee. I am giving one laptop every employee. Tell me, is it taxable? Is it taxable? Tell me, is it taxable? Answer would be yes. By virtue of the Schedule 1, there are two cash provisos says that up to 50,000 not taxable, but if it is exceed 50,000, it is taxable. Circular 92 has clarified. Circular 92 has clarified if something become supply by virtue of even Schedule 1, then such gift, then ITC on such gift of resemble is not being restricted by the 17.5H. ITC is allowed. Further given the clarity, buy one get one free, buy more get more. So in all these examples, you can read the circular 92, but the concept is that if your output supply become taxable because of composite supply, because of mixed supply, because of schedule 1, you are entitled to take ITC even if it is being written in 17.5H. Then any taxes paid in accordance with the provision of 74, 129, 130, then ITC is not allowed. It is blocked category. Now we are moving to the section 18, ITC in case of the special circumstances. Why they are saying special circumstances? Because these circumstances will not be covered in 16 and 17. What does it mean? It means either at the time of purchasing that item, you are not registered. But 16 subsection 1 says that every registered person. So it means if it is not, I'm not registered, or 17 subsection 1 and 2 says that you can't take the ITC if you are making the exempt supply. Or if you are registered in the composition, you can't take the ITC. Perfectly okay, no problem. It means as per the circumstances of 16 or 17, you are not allowed to take the ITC. But if you are covered in the fourth situation, what are the four situations? I can say that I have taken the registration mandatorily. Mandatory registration. Or I have taken the registration voluntarily. Or my registration which was under composition, I have converted from composition to regular. Or I was making the exempt supply and now this supply become taxable. Fourth situation, always remember. If I have taken the registration mandatorily within 30 days, if I have taken the registration voluntarily, or I have converted my numbers from section 10 to section 9, or exempt supply become taxable supply in four circumstances, I can take the ITC of the stock. No problem. You can take the ITC of the stock, semi-finished goods, finished goods. You can take the ITC of the stock, semi-finished, finished goods. You can take the ITC on stock as well as ITC on the capital goods. Here also you can take the ITC of stock as well as ITC the capital. Okay. But 18 subsection 2 says that whatever the ITC you are talking here, stock, capital goods, etc., it should not be older than 1 year. It means if you have the tax invoice within 1 year, then only you can take the ITC. If it is more than 1 year, suppose I have purchased the stock 3 years back, which is still in the stock, and now I am paying the tax, or my supply become taxable, or I have converted my number from composition to regular. 18.1 is giving the permission that you can take the ITC of the stock, but this stock should not be older than 1 year. It means if you have the tax invoice date prior to 1 year, then it will be not eligible as per 18.1. So you can see that in case of the mandatory registration, the application should be made within 30 days. So the date of the liability, the date from which he become liable to pay the tax, whatever the stock lying immediately prior to that, he can be able to take ITC. For all this purpose, how the ITC to be taken? Will it appear in GSTR 2B? Answer is no. It will not appear in GSTR 2B. How can I take the ITC? There is certain forms which is not applicable for our exam purpose. These ITC would be taken through certain forms like ITC 1, ITC 2, ITC 2A. Some forms are there. So you can take the ITC by filing the form. This ITC will not be routed through GSTR 3B. This ITC will not be routed through GSTR 3B. Right? Then 18 subsection 3 says that if you have transferred the business, transfer, merger, amalgamation, etc., A has transferred the business to B. Then whatever the ITC is there, it will be transferred through certain forms to B. Subsection 3 says that if there is a change in the constitution on account of the sale, merger, demerger, amalgamation, lease, transfer, with transfer of liability, a registered person shall be allowed to transfer the ITC which remain unutilized in his credit ledger. How he can transfer? Through certain forms. To whom it will be transferred? To such sold, merged, amalgamated, leased, transferred business in such manner as may be prescribed. Now, again, I am talking about in 18 subsection 1, you have talked about 4 situations. Mandatory registration, voluntary registration, composition to regular, or exempt supply become taxable support. You are allowed to take ITC. Now, 18 subsection 4, we are talking about this 2 situation just reversed. Reverse means I have converted my number from regular to composition, or my supply which was taxable now becomes exempt supply. So here I am taking the ITC, but in the reverse case, I will reverse the ITC. I have to pay registered person who has availed the ITC now opting to pay the tax under composition, or when the supply become tax exempt, then I have to pay the amount. How much amount I will pay? Mode can be credit or cash ledger. How much amount I will pay? Equivalent to the credit of the ITC, equal to the stock. And on capital goods, one thing remember, when you're taking the ITC in the capital goods, or when you're reducing the ITC, reversing the ITC in capital goods, always the concept of 5% a quarter will come into the picture. Suppose I have purchased the machine, capital goods 1 year back. The ITC was rupees 1 lakh. Can I take entire 1 lakh? No. You have to reduce 5% per quarter. Per quarter, it means I will reduce 20,000 and eligible to take the ITC of 80,000. Same pattern, if you have taken the ITC of 1 lakh because you are making the taxable supplies, now you are making the exempt supply. Or that supply become exempted, or you have converted your number from regular to composition. Then you need to reverse the ITC. On capital goods, you are not required to reverse complete ITC. Suppose you have used 2 years. So 2 years means 40%. I will reduce 40,000. Then I will reduce means 40,000 I was eligible. Then balance 60,000 I will reverse. 60,000 I will reverse. But the stock and capital goods, you have to reverse entirely. See, for taking the ITC, 18 to talk about limit of 1 year. 18 to talking about the limit of 1 year. Please see 18.4, which is on reversal of ITC. Is there any requirement of 1 year? Answer is no. There is no requirement of 1 year. It means even after 2 year, 3 year, whatever, you have converted or your supply become exempt, then you need to reverse the ITC, or I can say I will pay the amount. Reversal or payment is almost same, no problem. Let's move further. 18.6 is very, very important. Whenever you supply the capital goods or plant and machine on which ITC has been taken, and being supplied prior to 5 years. Prior to 5 years, then how much amount you need to pay on the supply of the capital goods or plant and machinery? You calculate two amount and whichever is higher you need to pay. First is very simple, tax on transaction value, and second is ITC on the capital goods or plant and machinery reduced by such percentage. Suppose you have purchased the capital goods of 10 lakh on which the GST was 1 lakh. I am making the rounding off to ease for calculation. And this particular plant and machinery you have sold after 2 years. You have sold after 2 years, let's say in 10,000 rupees. You have sold in 10,000 rupees. So 1 lakh was the taxable value and tax was 10,000, let's say. What is the tax on the transaction value? 10,000. You need to pay only 10,000 more. 18(6) says that always whenever you are selling the capital goods or plant and machinery, you compare the two value, whichever is higher will be the amount to be paid on this supply. First, tax on transaction value, let's say it comes to 10,000, and second is how much ITC you have taken, 1 lakh. How much year you have used? 2 years. So 5% per quarter means I am eligible for 40%. It means minimum you need to pay 60,000, not 10,000. You need to pay 60,000, whichever is higher. However, this bricks, mold, dies, fixtures, which are supplied as scrap, then the 5% per quarter wala funda will not be applicable. You can simply pay the tax on the transaction value as per section 50. Now, Rule 86A. Rule 86A says that condition to use amount available in the credit ledger. So here the commissioner or any officer authorized have the not below the rank of the assistant commissioner having power that they can block my ITC if ITC has been fraudulently availed or ineligible. Why it is ineligible? Because I have not received the goods, because the supply found to be non-existent, or the ITC which I have availed has not been paid to the government, or recipient is found non-existent, or no tax invoice, then they will not allow me debit my electronic credit ledger. What does it mean? Debit to the electronic credit ledger? It means whatever the ITC available in my credit ledger, I cannot use for making the payment. This restriction will be available for the 1 year only, and they have given the bifurcation that not exceeding 1 crore, then these would be the designated officer, etc. 86B says that 1% liability has to be discharged in cash. You cannot use the ITC when if your taxable supply other than exempt and zero rated taxable supplies exceed 50 lakh. So if my taxable supplies exceed 50 lakh, let's say my tax percentage is 5%. So I can say 2.5 lakh is my tax liability. That 1% of my tax liability, it means 2,500, right? 250,000 is my tax liability. 1% means 2,500 I have to pay in cash. If my total value exceed 50 lakh, not exactly 50 lakh, exceed 50 lakh, let's say it is 60 lakh. The amount comes to 3,000. So 86B say that 1% has to be paid in cash, but there are 5 exceptions. If that person or proprietor or karta or MD or any of its two partner, full-time director, member, etc., paid more than 1 lakh as income tax in each of the last 2 financial years. And which financial year to be considered? The financial year for which the time limit to file the return under income tax being expired. Individually, then it will be counted as after July. Whatever the due date is there. After the date is being expired, you will consider that return If in that return, the last two return, this person has paid more than 1 lakh, then income tax, then this restriction will not be applicable. What is the restriction on liability in cash? Or he has taken the refund of unutilized ITC, or he has taken the refund of duty structure, then he is allowed, he is not required to pay 1% in cash. He is already paid in cash more than 1% cumulatively. Uh, so, for example, my in my month of April, there is no ITC. There is no ITC, but I have to then whatever the tax liability I have to pay in cash. My sale is below 50 lakh. Still, I have to pay in cash because I do not have any ITC. So, because I have already paid 1% cumulatively, more than 1%, then again this 86B car restriction will not be applicable. If I'm the government department, PSU, local authority, statutory body, not applicable. And commissioner can remove this restriction after such verification as they deem fit. Now, let's take a break, another break of 10 minutes. So we will resume at 8:50. We will resume at 8:50, and I will provide the again 8:30 till 8:30. I will provide the discussion. I will teach, and then you can ask any question. Okay. So let's start the break for 10 minutes. 15 पर हम start करेंगे. अशोक जी. Now I am reading the payment of taxes, section 49, subsection 5, 49 capital A, 49 capital B, rule 88A. So these and circle, there is a one circular 98. So by combining all, we are discussing how to make the payment of taxes. So first, I'm directly coming to the three example. Coming directly to the three example. So A has the output tax liability of IGST nil, CGST 20,000 and SGST 20,000. Okay. He has the ITC of 20,000 under IGST, 12,000 under the CGST and 15,000 under the SGST. Now my point is we need to do the cross utilization, in which I will explain the section 49 subsection 5, 49 capital A, 49 capital B, then these are the section, and then rule 88 capital A and circular 98. Combining all the things, I am explaining the provisions. First, IGST will be used toward the IGST ka tax liability. Okay. If after utilizing the IGST ka ITC toward the IGST ka tax liability, the balance amount has to be given to the CGST and IGST. Now, please note, they are saying any order, any manner, and circular 98 saying that any proportion. What is the meaning? It means that this 20,000 can be apportioned either 10-10, 20-0, 0-20, 15-5, 12-8, whatever you want, you can do, but only condition the ITC of IGST should become 0. Then only you can use the CGST and SGST ka ITC towards its tax liability. Point number 1, IGST will give the amount to IGST. After that, it will be apportioned in any order, any manner, any proportion. Let's say I am saying 10-10. Is it become 0? Now, sir, it is become 0. Then how much amount is required for CGST? 20,000 is the tax liability. How much is being used from IGST ka ITC? 10,000. The balance amount they can take from C from its own head. But if C have the shortage, they can never take from S, and similarly, S have the shortage, they can never take from C. SGST now can give to SGST, yes. Only one condition, that check the IGST ka ITC should be 0. Now we can take 10. What is the tax liability to be paid in cash? Nothing. What is the closing balance? IGST would be 0, CGST 2,000, SGST 5,000. It can be changed also. Suppose might be you are saying that you are using here 15,000 and here 5,000. Possible? Sir, possible, no problem. No? The total 20, so the balance is 0. It becomes 0, then you can use for C, you can use for S. So what is the requirement? 15 has been taken, total 20. So 5,000 they will take from CGST, and SGST need 20,000, 5,000 they have taken from I. So the balance they will take from S. So what is the closing balance of SGST? This time it becomes 0. What is the closing balance of CGST? 7,000. So it can be 5,000, it can be 5 and 2, it can be whatever the combination it can be. But yes, the total 7,000 would be there and nothing is to be paid in cash. Second example. In this example, I like to explain that IGST need 10,000 and this time IGST have only 5,000. Let's say they will give the 5,000. My question is, I like to explain here, CGST has only 5,000. Will they give first to I or will they give first to C? That is the point which I like to highlight by this example. When you read section 49 subsection 5, you will be able to understand that CGST will, before giving to I, first they will discharge their own tax liability. And if they have excess balance, then only they can give the donation. So it means in this example, 5,000 from I to I, 5,000 from C to C, and 5,000 from S to S. So it means 5,000 ka liability of IGST to be discharged in cash. I hope it is clear. Third example I like to explain. I make the same example, just only the balance I have changed. In this example, I like to clarify the word any order, any manner, any proportion. We have just now discussed the any order, any manner, any proportion. This word is applicable when you are distributing IGST ka ITC towards C and S. Make sure the IGST ka ITC, when you are distributing to C ka liability and S ka liability, then only this word is important. If suppose C or S is giving to I, this time CGST ka ITC or SGST ka ITC, they are giving to the IGST ka tax liability. Whether this word any order, any proportion be used, answer is no. Why no? Because when you read the section 49 subsection 5, you will understand that I will take the amount first from I. If I become 0, then they will go to C. If C becomes 0, then they will go to S. It means when IGST is donating the amount to C or S, the concept of any order, any manner will come. But when IGST taking the amount from C plus S, then the concept of any order, any proportion will not come. Here there is a sequence. First from I, then from C, then from S. In this example, it need 10,000, 5,000 from C. Can they directly take from S? No. Can they take 2.5, 2.5 each? No. They have to take first from C. So C will give first to CGST. Whether C has the excess balance? Yes. They can give the balance to I. Nothing to nothing. I will not take nothing from S, because here arrow is like this. In this case, the any order, any manner, any proportion will not work. The closing balance would be 0. Here would be 5 and here would be 10. So last example, please give the answer to this question. I'm expecting the answer for this question. I have explained the provision, all the provision I have explained. Read the question and then try to give me the answer. What is the right answer for this question? Abrakesh, Viraj has given the answer. Any other participant? What is the right answer? If you have the tax liability in each head, means you have the liability in ICS. Similarly, you have the ITC in each head. What is the sequence for utilizing the ITC of CGST? Tell me one answer. Yes, absolutely correct. Abrakesh is absolutely correct. The right answer is C. Why? Tell me one thing. Can ITC of the CGST be given to SGST ka tax liability? Will the ITC of the CGST be able to donate to the SGST ka tax liability? No. No. So it means the first option and second option is not feasible at all. So A and B is removed. Only C and D is there. So when I told you that you will think of donation when you satisfied your own house ka requirement. So if you will give the first to the CGST, then you will give to the IGST. The right answer is C. Absolutely correct. Now let's move to the uh, that is okay. Uh, so that is okay. Electronic credit ledger can be used for making the any liability. Yes, even there is a liability of demand also. You have that. You can use the ITC. So this we have completed the ITC chapter. Let me move to the one circular 199. Basically, in the amendment part, I like to discuss statutory updates for May 2024. While a statutory update, I have opened that. So first, I have already explained that the 49C section 40 rule 43 ka explanation 1 clause C has been omitted. Why it has been omitted? See, exempt supply not considered as exempted for the purpose of reversal of ITC. In this, there was first clause, this clause C was there, transportation of goods by vessel from India to outside India. This exemption was withdrawn on 30th September 2022. It means from 1st October 22, it become taxable. So if the transaction is not taxable at all, then what is the use of given in the explanation 1 to 43. So that was not relevant. Actually, not exempt supply. No question of reversal of ITC will come. Therefore, they have omitted the clause C. And second, I have discussed that para 8A of schedule 3, para 8A of the schedule 3, which has been added. So now the value of the supply as may be prescribed in respect of the clause A of the para 8, that will be now schedule 3 para 8A. If you have the some transaction of para 8A, then it will attract the reversal because 17.3, which talks about the meaning of exempt supply, they have included schedule 3. Para 5 was already there and para 8A was now added. The third amendment. See, clarification with respect to GST. Clarification, availment of ITC in respect of the common input service procured from a third party but attributable to both HO and BO or exclusively to one or BO. It means, let's say head office has taken certain input service. I'm talking about service only because ISD is the distribution mechanism for services only. It cannot distribute the goods ka ITC. So in this circular, they are saying if HO has taken certain services from third party for the benefit of one branch or for the benefit of multiple branch. Following clarification has been issued. Whether HO can avail the ITC in respect of the common input service procured but attributable to both HO and BO or exclusively to one or more BO. They have clarified. Let's read the clarification. They are saying it is clarified that in such case, as per the present provision, it is not mandatory to distribute ISD. It means ISD mechanism is not mandatory as of now. I do agree that Finance Act 24 has made the amendment in the ISD section. Finance bill was there, which has become the Finance Act 24, but it is not yet notified. It is not yet notified the applicability date of this provision. So Finance Act, so in future, let's say any date it will come, then the date when the provision of the Finance Act become applicable, become effective on that date, on or after that day, we can say ISD provision is mandatory. Till that time, Circular 199 has clarified that ISD provision is not mandatory. Then, therefore, HO has any one option. Either he can distribute the ITC through ISD mechanism. Not mandatory means optional is there. Suppose one organization has taken the registration under ISD, obviously they can follow the concept of distribution of ITs through IST mechanism, no problem. And second is issue the tax invoice under section 31. It means it is nothing but simply in normal common layman language, we are talking about the cross charge. Cross charge means raising the invoice by HO to BO or more than one BO. So therefore, they can definitely take the ITC and they can distribute the same either through IST mechanism or through raising the tax invoice also. Means HO will take the ITC and they can distribute the ITC to the branches. IST mechanism can be opted only if the said input service are attributable to the said BO or have actually been provided to the said BO. In case the IST mechanism is opted, HO is required to get itself registered under the IST. And similarly, the HO can issue the tax invoice, which we have discussed. Now, from my side, it is completed if I will move to the example. But if anyone like to discuss any question, it's over to you. You can unmute yourself or raise your hand. You can just raise your hand and you can ask. So, okay, Abrakesh is asking. Let me unmute and then I have unmuted you. Now you can ask the question.
Good evening, sir. It's regarding
Very good evening.
section 18, where, as you told that, I mean, it is in the law that any rate of the particular goods, exempted goods, is chargeable to tax. Then the ITC of that goods lying in the stock can be taken. Am I correct?
Okay.
Now, my question is, when I have not paid any tax earlier.
Correct. Got your question. Correct. Got your question. So suppose I am doing the, let's say one item which is exempted, but I'm not doing the trading. Let's say I'm doing the manufacturing. Now the item which is exempted earlier, now it becomes taxable. But yes, I have not purchased that item, because if I have purchased that item, then your point is absolutely correct. Okay. Because I have not paid the taxes, then question of ITC will not come. Correct?
Okay.
But suppose I'm doing the manufacturing. I have purchased the raw material. I have purchased the capital machinery. I have purchased the packing material on which I have paid the taxes. So your point is correct. If at all any item in the stock is there on which I have paid the taxes, I can take the ITC of that stock. It can be packing material also, not necessarily same item.
Yes.
Is it clear?
Yes, sir. Another question, sir. It's regarding works contract. The first line in your slide, sir. I mean, can you just explain again? I'm not clear.
Can you please?
Sorry, works contract. I mean,
you mean? Yeah, now audible. Give me 1 minute. Give me only 1 minute. Give me 1 minute. Sorry, Abrakesh, I request please repeat your question.
Yeah. Can you just, sir, explain again the issue on the works contract? Very first line in your slide. Works contract.
Okay. So shall I? Let me confirm that. Is it correct slide?
No, no, it's on works. This one. See. So,
kindly ask.
See, works contract services when supplied for construction of an immovable property other than plant and machinery, except blah blah blah. Can you just explain this? Why it is not? I mean, credit is not available. Except.
Okay.
The except without, I mean, not considering the exception. Works contract services when supplied for construction of immovable property. Up to that, I mean, why that credit is not available? Ignoring exception.
Ignoring exception. So why credit is not available? It is a very simple question. It is a very simple answer because it is written in the law, credit in the law.
Acha. See, I mean, okay. Okay, fine.
Fine. Huh? See, there is an altogether different argument is going on in one of the judgment. See, if I talk about some practical position, there's a one different judgment which is going on in the Supreme Court. Okay. They will decide in the Safari Retreat Supreme Court whether the ITC should be actually blocked or not blocked. But the answer to your question, it will be simply because it is written in the 17.5.
Okay. Thank you, sir. That's all.
Any other?
No, sir. I'm through.
Thank you. Any other participant like to ask any question? Kindly raise your hand. Any other participant? So let me move to the Pradeep. Yes, Pradeep has also given the right answer. Uh, Fine, fine. Anyone can join. If anyone like to interact, anyone like to ask the question, like one participant has recently asked. In this manner, if you like to ask, you have to join the Zoom. Now, our board of studies is providing the facility to ask the question by unmuting yourself in the last half an hour. So I have unmuted you. Please unmute yourself, Abrikesh, and
Yes,
speak.
sir. Sir, it's regarding the order of clearing the credit, ITC credit. Sir, while filing the return, I am talking about practical issues which I faced. When there is a no balance, balance in ITC, balance in IGST, CGST. Now, portal forced me to use IGST full to the CGST and not to the in particular proportion or equal proportion to CGST and IGST, SGST. Sorry.
We cannot see because it is not it may be any practically we cannot discuss too much. Reason I'm saying one thing, there can be any restriction, let's say for that taxpayer. Second, there can be some technical issue also because multiple times the technical glitches are there. We all know we have to raise the ticket, then we get the solution. So might be there could be any other reason, but if I say that I have not seen this particular problem normally it is being allowing, but might be it could be some technical glitch or some any specific reason. We have to understand from that point of view. Otherwise I cannot give the answer, but academically I can say there is no problem.
Okay, thank you, sir. I am through.
Fine. Let's move to one. Let me take some practical question. So, practical example, I'm taking from study material only. Let's say there is a one question. PQR Company Limited, a registered supplier of the Bangalore, is manufacturing the goods. Company provide the following information pertaining to the GST paid on the inward supply for the month of April. Okay. Then they are saying life insurance paid by the company for the life insurance the factory employee as per the policy of the company. There is no legal obligation. Now tell me, simply say yes or no whether the ITC would be available or not. I request everyone in the chat that kindly give the answer. So ITC would be available or not? ITC would be available or not? No, not available. Why not available? Why not available? Because it is not the obligation. You remember we have discussed in the 17.5b this legal obligation. You cannot take the ITC of the life insurance or health insurance. Normally, when you can take the ITC, if it is a legal obligation. If it is obligatory by any law to provide to its employees, then ITC would be available. Okay. Raw material purchase for which invoice is missing, but delivery challan is available. Can you take the ITC? Can you take the ITC? Raw material purchase for which invoice is missing, but delivery challan is available. Can you take the ITC? Answer would be again no, because no ITC. Reason? Because we have discussed in the 16 to read with rule 36 sub rule 1, there has to be the tax invoice or the debit note. Correct. Raw material purchase which are used for zero rated supply. The tax is zero, the supply is zero rated. Can you take the ITC? Supply is zero rated. Can you take the ITC? Supply is zero rated. Can you take the ITC? Answer is yes, I can take the ITC. Can you give me the reason? Can you give me the reason? Really appreciated if you can give the reason why ITC would be available to the zero rated supply. You can give the two reasons. One reason 16.2 of IGST Act, which says that irrespective whether it is, even if it is exempted, you can take the ITC. Second reason 17.2, which talks about taxable supply including zero rated, means zero rated is considered as taxable supply, therefore you can take the ITC. 17.2 of the CGST Act and 16.2 of IGST Act. Works contract service used for repair of the factory building which is debited to the profit and loss account. Tell me whether ITC would be available or not available. Tell me whether ITC would be available or not available. Bablu Kumar is saying yes, available. Absolutely correct. The works contract, why available? Point to be noted. See, it is debited in profit and loss account. Where the blockage is there, let me go to the slide again. Open that slide. Explanation says that for the purpose of this clause C and D, the construction include to the extent of capitalization. If it is debited to the profit and loss account, if it is debited to the profit and loss account, it means it is not the capitalization. If it is not the capitalization, it means it is not the construction. And if it is not the construction, ITC is not allowed. Construction means capitalization. It is not the construction as per the meaning of explanation. Correct? So, Pradeep, Bablu, Mansa, Vibhor, everyone is clear? Let's move further. The company purchased the capital goods. So as of now, we talked about 50,000, 30,000. Company purchased the capital goods for rupees 4 lakh and claimed the depreciation of 44,000. That is 10% on the full amount. 4 lakh taxable value, 40,000 tax part. Total value is 4 lakh 48,000 and they have claimed the depreciation of 44,800 something now. So please tell me, will the ITC be allowed of this 48,000? Whether the ITC would be available or not available? Answer would be ITC not allowed. Reason? Because they have capitalized the GST part also, and therefore they are taking the depreciation on the GST part. So double benefit will never be allowed. 16.3 of TGST Act saying that if you have capitalized the tax part, you cannot take the ITC. So Viraj, you like to ask the question? No problem. Let me unmute. Okay. So you can ask the question.
Sir, am I audible?
Yes, audible. Audible, Viraj.
Sir, I want to ask about input tax credit on capital goods. Sir, whether it is allowed in the year 100% or it is allowed partially?
Fine. Very nice. Very nice question. So first, the point is the partially concept was applicable in the pre-GST regime. We all know the answer would be 100%. You can claim, you have to, not you can, you shall know. you have to claim immediately also. The reason is, if you not claim till November after the end of the financial year, then your ITC become ineligible. You can't claim at all. So meaning thereby you have to claim 100% within the time limit. There is no concept of 50% in first year and 50% in subsequent year. So this is my answer.
Thank you, sir.
Okay. So let me move to the another question. Next question is capital goods purchased on which depreciation has been taken on full value including GST, ITC available or not available. It is a repetitive. Next illustration. But tell me the answer. Will the ITC be available or not available? Not available. Absolutely correct. Goods purchased from the Ravi trader. Invoice of the Ravi trader is received in the month of Jan, but goods received after 2 months in the month of the March. Can you take the ITC in the January? Here we are not talking about any filing of the GST return. Here we are not talking about the filing of the GST return. So can you claim the ITC? So claiming and reversing, that the concept is applicable in the GSTR 3B abrogation. Bilkul, absolutely correct. No problem. Correct. But as per the law, if I talk about, actually I'm not allowed. See, you will take and you will reverse. Ultimately, are you claiming the ITC in the month of Jan? In the month of the Jan, are you claiming the ITC? You are taking and reversing. Net amount is 0. Are you claiming the ITC? Answer is no. Whether you talk about the GSTR 3B or you talk about the law, you are not entitled to take the ITC in the month of Jan. Net ITC you are not entitled to, because if I talk about the definition, if I talk about the condition of the 16.2, one of the condition is talking about the clause B says goods or services should be received. In this example, because goods has not been received, so answer would be no. In the month of January, answer would be no. Yes, in the month of March, I can claim the ITC. Car purchased for making the further supply of the car. Such car is destroyed in the accident while being used for test drive for the potential customer. Now tell me, will the ITC be allowed or not? Will the ITC be allowed or not? Will the ITC be allowed or not? Ideally, the ITC is allowed. So in this particular question, answering to these type of the question, you will give the answer first that because car is being used for making further supply. So as per 17.5a, if you cannot recall the section, not required, not important, but concept kindly explain. Because it is further supply of that motor vehicle, so ITC is not blocked in 17.5. Ideally, ITC allowed. But because the car is destroyed in the accident, and which is if any disposal, goods lost, destroyed, etc., then ITC is blocked in 17.5H. So effectively, I can't take the ITC. So both point has to be there in the answer. So make sure that you will, when you will explain the reasoning as a working note in the exam. So please, both reason to be explained. First, that yes, ITC is allowed because it is further supply, so therefore it is not blocked. However, because this vehicle is being destroyed, which is blocked in 17.5H. Again, I'm repeating, section ka number is not too much important, concept is important. So destroyed, because of that, the ITC would not be allowed. Okay. So next question is, next part is goods used for setting up the telecommunication tower. I told you that they will ask directly the telecommunication tower, factory pipeline led outside the factory premises. Why? Reasoning. ITC is not allowed? Fine, no problem. Reasoning, why ITC not allowed? What you will give the reason in the exam. Correct. So ITC is not allowed because ITC is blocked other than plant and machinery. And the explanation says that plant and machinery exclude like pipeline led outside the factory premises, telecommunication tower, etc. is not the plant and machinery. And if it is not the plant and machinery, ITC is blocked in the 17.5 C or D. Okay. Last, truck purchase for the delivery of finished goods. Will the ITC be allowed? ITC allowed or not allowed? ITC would be allowed because it is not the transportation of person. Now, last 10 minutes, as usual, I'll do the fire quick round of the question answer. I'll ask the question, try to give the answer at the early. And by this, I will try to summarize the entire revision of the ITC chapter. Whatever we have discussed, we will try to summarize. Question number 1. Can the composition dealer be eligible to take the ITC? I will try to summarize the entire discussion, whatever we had, to the extent it is possible. Question number 1. Can the composition dealer be eligible to take the ITC? Answer is no. Answer is no. There were the 6 conditions for taking the ITC, out of which one condition is GSTR 3B has been furnished. This GSTR 3B has been furnished by the supplier or by the recipient? Answer is by the recipient, not by the supplier. And we have discussed multiple conditions in which they are talking about some return. It has to be appear. Will this transaction to appear in my GSTR 2A or will this transaction be appear in my GSTR 2B to become eligible for ITC? The answer will be GSTR 2B. The answer will be the GSTR 2B. Can you tell me any one more document for taking the ITC? I know the tax invoice and the debit note has to be there. Any one more document which is relevant for taking the ITC? Apart from invoice or debit note? Yes. There could be the bill of entry. Absolutely correct. ISD invoice. Absolutely correct. No problem. So now tell me, bill to ship to model is possible for serviceage? The answer would be yes, it is possible. It is possible. It is possible. Now tell me, in the bill to ship to model, who is eligible to take the ITC? In the bill to ship to model, who is eligible to take the ITC? So officially, I cannot say, I cannot show this particular document, but I think it is available in the study material. You can just scroll down the study material. I have seen it somewhere. We'll see and then try to show you in the next class. If it is available in the study material, then I will definitely show you. Okay. Absolutely correct, Abhirgesh. Very nice answer. Very nice answer. The bill to ship to model, who is eligible to take the ITC? The person to whom it is billed. The person to whom it is billed. Correct. Now, in the case of the goods received in the lot or installment, when I am eligible to take the ITC? In case the goods are being received in the lot or installment, when I can take the ITC on the last lot. If the last lot is being received after the end of the financial year, after November, then can I take the ITC? Answer would become no, not because 16.2, but it is time barred by 16.4. It is time barred by 16.4. Therefore, I have not made payment to the supplier within how many days, then ITC need to be reversed? If I have not made the payment to the supplier within how many days, then ITC need to be reversed? The answer would be 180 days. Will it be with interest or without interest? Will it be with interest or without interest? It will be with interest. Tell me two situations where the even I have not made the payment within 180 days, then also I am not required to reverse my ITC. Tell me two situations wherein I am not required to reverse my ITC even after crossing 180 days. Two situations, even after crossing 180 days, I am not required to reverse my ITC. No. My question is, I have not made the payment to the supplier within 180 days, but still I am not required to reverse my ITC. When? First is schedule 1, second is reverse charge, third is you can say part payment, and fourth is one valuation provision we have linked with. What is that? 15(2)(b). If something value is being added because recipient has made the payment on behalf of the supplier, and that is being added because it is not being added, it is not being included, then it will be added in the value of the invoice. But to that extent, reversal will not come because recipient has already made the payment. Can you explain in one line what is the rule 37A? Can you explain in one line what is the rule 37A? Can you explain in one line what is the rule 37A? Let me talk about 37A, talking about supplier not file the GSTR 3B, then ITC need to be reversed by the recipient. Till what time the supplier not filed the 3B, then 37A will attract the reversal. My question is, till what time supplier not file the GSTR 3B, then ITC need to be reversed by the recipient. Till what time supplier not file the 3B? The answer is 30th September after the end of the financial year. The ITC need to be reversed till what time? ITC need to be reversed till what time? 30th November. They have given the time of 2 months. Almost 2 months. They have given the time of 2 months. Almost I can say 2 months. So the ITC need to be reversed by the recipient till November without interest. Can I take the ITC of exempted item which is sent out of India? Can I take ITC of exempted item which is exported? Can I take the ITC of exempted item which is exported? Answer is yes. Tell me, now the important question. If I'm saying, tell me the supply which are exempted, but does not attract the reversal of ITC, rule 42-43. Give me, there are two types of the exempted supply, which are ideally exempted, but that cannot attract the reversal. So the relaxation will not be there because of that exempt supply. There are the two clauses. The third, there was a clause C which has been omitted, recent amendment. I have discussed this part. Explanation 1 to rule 43 is covering the 4 transactions. 2 has been omitted. Now there is only 2. 2 has been omitted. Now there is only 2. Exempt supply does not attract the reversal. Tell me the two example, two situations which are exempt supply, but I do not require to reverse my ITC. First is interest. Second is duty credit discount. First is interest. Second is duty credit discount. Now one more question. Is the interest will not attract reversal of ITC in case of the bank? No, it will attract. In case of the bank, this interest, which ideally is exempted and also considered as exempted for the purpose of reversal. Try to understand. Remember these things. Okay. Bank has an option. Bank has an option. They can reverse. Instead of 40 to 43, they can straightforward reverse some ITC. How much percentage? Straightforward, they can reverse the ITC instead of applying the rule 40 to 43. The answer is 50%. Answer is 50%. In this 50%, something is not being included. In this 50%, something is not being included. In this 50%, something is not being included. Distinct person, ITC of the distinct person. Same pan, multiple GST. If there is an ITC, it will not be included. Let's talk about couple of questions from 75. If I have purchased the motor car up to 13-seater, if I have purchased the motor car up to 13-seater, then also I am eligible to take the ITC when I have purchased a motor car up to 13-seater for transportation of person. Still, I am eligible to take the ITC when? Further supply, absolutely correct. If it is for further supply, if it is for further supply, you are providing the training of that driving of motor vehicle, etc. Okay, renting of that passenger, absolutely correct, no problem. Now tell me, when I can take the ITC of the food and beverages, outdoor catering, healthcare, cosmetic, plastic surgery, life insurance, health insurance. Tell me the two situations when I can take the ITC. Tell me two situations when I can take the ITC. Answer is first, if it is compulsion by law, statutory obligation, absolutely correct. Second situation, if it is part of my composite supply, mixed supply, or one-to-one supply, then I am eligible. In the section 18, we have discussed ITC in case of the special circumstances. There are the 4 clauses we have discussed. Can you tell me in what was the 4 clause? Broadly, can you tell me what was the 4 clause which is being covered in the section 18? Four clause we have discussed in 18 subsection 1, in which ITC is available in case of the special circumstances. Any one or two? Any one or two? If it is possible, any one or two? Any one or two? Absolutely correct. Item become tax exempted to taxable. Absolutely correct. Composition to regular or mandatory registration or voluntary registration. In the provision, they are saying you can take the ITC of stock, etc., provided invoice should not be older than how many period? If they are saying that you are not entitled to take the ITC after the expiry of some period from the date of tax invoice. Answer is 1 year. Answer is 1 year. Can you tell me any one exception wherein? So first tell me, in the rule 86B, if my turnover exceeds some amount, then I have to pay certain percentage in cash. Can you tell me how much amount of the turnover, if it is exceeded, then rule 86B would be applicable? The answer is absolutely correct, 50 lakh. Effect. In the 50 lakh, will the zero rated supplies be added or not? No. If my turnover exceeds 50 lakh, then how much percentage I have to pay in cash? Answer is 1%. Answer is 1%. Tell me any one scenario in which I am not required to pay 1% in cash, even if my turnover exceeds 50 lakh. My taxable turnover exceeds 50 lakh. So there was 5 proviso. Can you able to help me to recall any one proviso out of the 5 proviso? Any one proviso? Can you able to recall me? This is the last question. Absolutely correct. Yes, Viraj, 1%, absolutely correct. Any partner, managing director, etc., has paid the income tax more than 1 lakh. Refund has taken more than 1 lakh. Government department, etc., more they are not covered in this exception. Already paid excess 1% cumulatively. Correct. So by this, I have completed my today class. So any other point you like to discuss, and else we can wind up our discussion today. We can close our today discussion. I have tried my best to cover almost every provisions, but still there may be the possibility that one or 2 points may not be covered in the quick revisions. Possible. So any other question? We can conclude. Thank you. So yeah, thank you. So fine, we are concluding our today discussion. Thank you very much, and we will meet in our next revision class. So Ashokji, you can complete the today lecture. Thank you. Good night. Good night.